Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello and welcome to the August 7th edition of Basis Loaded with Joe Schmit. I am Joe Schmit. This episode, as always, is produced by Paige Driscoll with help from the EverAg Insights team. Another gorgeous summer day in the upper Midwest. However, those summer days are fleeting. We'll enjoy it as long as it lasts. What better way to celebrate than with the latest? From the NDPSR report, starting with butter. This butter number coming in at $313.15 is a really nice price. That represents a plus 4.5 to the CME 1-week average of $308.45. 4.5 is well above our expected basis. We had a lot of volume on the CME last week. 39 loads traded on the CME at essentially 311. So big volume at the CME. Also that 308.45 is the low week at the CME. So not a lot of that low got in. So when you combine low week that didn't get into the NDPSR, as well as a lot of volume, a lot of weight trading at the CME at an elevated level, that's the recipe for higher than expected basis. Plus 4.5 certainly qualifies. What is interesting, that is a really nice price, but even with all that weight that we traded at the CME, the volume here in the NDPSR, still just a little bit north of 2.1 million pounds. So the tail of the tape in butter is higher than expected basis on lower than expected volume. Up next in cheese, it's kind of a similar story. Here in the block, 193.90, that's a plus 8 to the CME 1-week average of 186.30. Plus 8 is definitely well above our expected 2 to 4 cent positive basis in the block, so almost double our expected basis. And again, similar to butter, this was the low week at the CME. Prices at the CME dropped for 1 week before bouncing right back higher. None of those lower values on the CME translated here to the NDPSR with that plus 8 positive basis, 193.90, a really nice price relative to the CME index. We only traded 4 loads at the CME last week, 4 loads at essentially a 191. So it was an elevated level, but not a lot of weight. And speaking of not a lot of weight, that is again the story here in the block. Falling short of 10 million pounds, well short of our expected 12 million expected volume. So the manufacturer was able to call a nice price on limited volume, and that has been the story as of late in cheese, and that story continues in the barrel. This barrel price of 197.88 represents a plus 5 to the CME 2-week average of 192.90. Now the CME is ascending, moving higher here, and the NDPSR keeping pace. You'll notice that this barrel at 197.88 is a full 4 cents premium to the block. So this strength in the barrel seems to be the premium product as of late. As basis is close to normal, our expected basis in the barrel is 4 to 6 cent positive basis. Here at plus 5, we're right in the middle. But the elevated price at the CME and middling basis on the NDPSR once again translates to the barrel coming in at a steep premium to the block. However, at that price, the manufacturer failed to move the expected 13.5 million, but still 12.7 million pounds on the NDPSR. Nothing to sneeze at, and is really an outsized volume relative to recent weeks. So I'd have to call it a win for the manufacturer in the barrel with normalized basis on higher volume. In the weigh, this week's weigh price came in at 46.72. That is a minus 4 to the CME 1-week average. So this is 6 weeks now of minus 3 to minus 4 basis in weigh. So we've had a month and a half for these higher prices that we're seeing at the CME, experiencing at the CME, to translate to the NDPSR. And if you look at the chart here of the CME spot price relative to the NDPSR price, NDPSR prices are trending higher. However, we still have yet to see anywhere close to the lofty levels that the CME has been able to achieve on the NDPSR report. $46.72 still a nice price. When you compare that to the July 20th NDPSR of $44.99, the manufacturer was able to call greater than a penny and a half premium to prior week's NDPSR. So that also is a good price. But maybe a warning shot here for whey is this volume. At that elevated level, at 46.72, the manufacturer only able to move a little bit more than 4.3 million pounds. So short of our 4.5 expected volume and well short of the sales volume that we have experienced in recent weeks. And then lastly, non-fat, 121.56, that represents plus 3 to the CME 1 week average of 117.95. Again, we had big volume on the CME last week. 25 loads trading at 124. So 25 loads trading at an elevated level on the CME last week. That's a lot of weight going in at an elevated level. Probably part of the reason that the manufacturer was able to call this premium. However, even with all that weight trading at the CME, it's a similar story that keeps reoccurring through this week's report. A lot of weight traded at the CME last week. However, volume here on the NDPSR just a little bit north of 13.5. So very disappointing volume, falling 6.5 million pounds short of our expected volume threshold. So the manufacturer was able to call a very nice price on lower than expected volume. So we are in the August pricing cycle. This is week 1 of 5 of August pricing. Currently getting an August Class 3 of 2025, August Class 4 at 21.25. We are still pricing August at the CME. However, if you take today's CME price and carry that all the way through the 4-week September pricing cycle, also getting September Class 3 of 2025 with September Class 4 at 21.25. So although we're seeing a lot of volume on the CME futures day to day, NDPSR or Class 3 and 4 projections carried forward are exactly the same for September as I'm currently coming up with the Class 3 and 4 projections for August. We will wait and see what they have in store for us at the CME in the weeks to come. Until then, on behalf of Paige and the entire EverAg Insights team, thanks so much. We'll see you next week. Bye.